Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you like to read what John writes on a regular basis, you can head directly to incomeinvestors.com. You can find the link to the website in the description below. Contrarian investing involves buying assets that are low and not in favor. This strategy is risky, but can be lucrative. Now, you may wonder what contrarian investing is all about. While convention investing wisdom calls for following the trend and the crowd, contrarians seek opportunities in undervalued assets or sectors experiencing temporary setbacks. One contrarian opportunity that could be in the making these days is 3M Company, traded on New York Stock Exchange under symbol MMM. John?
3M Company, as many people probably are aware because it's such a big company, they operate across diverse industries, offering a wide range of products and solutions. For the average American, 3M is known for iconic products or brands like Post-it notes and Scotch tape, but it's actually a lot more than that. The list of all the products and services that 3M Company offers is really too big and too long to mention here, but some of them include abrasives and finishings for metalworking, power distribution on electrical equipment, reflecting signage for highways, skin and wound care, and home cleaning products.
3M stock hasn't been doing so well, but it remains a fundamentally strong company.
Yeah, over the past few years, 3M stock has faced a lot of selling. Mid-2021, 3M stock traded as high as $184.17 per share. Now it's trading around $96 per share, and that represents a decline of almost 50%. If you look at the chart on incomeinvestors.com, it looks pretty scary. 3M stock is actually trading at some of the lowest levels in the last 10 years.
What happened?
Well, there's some very valid reasons behind the selling. The company is in the midst of fighting a few major lawsuits, and its business hasn't been as stellar. So investors are genuinely concerned. And you need to ask yourself if the current sell-off is really an overkill.
And speaking from experience, market participants become a lot more pessimistic on bearish developments and take the price a lot lower than it should. The opposite is true as well. They get too excited and take the price too higher than it should be on bullish developments. Eventually, though, the price reflects its fundamental and comes to its true value.
Yeah, and right now, Wall Street analysts see a lot of upside for 3M stock. Of those providing a 12-month share price forecast, the average target is, I think, $111.52 per share, with a much higher high estimate of even $189 per share. And here's what you need to know about 3M Company. Despite all the bearishness, 3M remains a fundamentally strong company, and its business is expected to improve. Now, if you take a look at what Wall Street analysts are projecting, they expect 3M to report revenue growth of 1.6% in 2024 and a further 3.1% in 2025. Revenue is expected to be around $31.9 billion this year and $32.9 billion next year. Now, as for profitability, 3M is expected to report earnings per share of $9.59 in 2024, increasing to $10.28 per share in 2025. These estimates could change as the fear of recessions have faded, inflation has eased, and interest rates are expected to decline. It's a real possibility that 3M's business improves even further. They do, after all, have a pretty loyal customer base.
Now for the fun part, dividends. For income investors, 3M has raised its annual distribution for 64 consecutive years.
Yeah, thanks to the recent decline in share price, 3M Company's dividend yield is looking pretty attractive at 6.44% or $6 per share on an annual basis. 3M Company is also one of those dividend payers that has a history of making sure buy and hold investors are happy. It has paid dividends to its shareholders without interruption for over 100 years, and it's actually raised its dividend, as you noted, for 64 consecutive years. That puts it deep in dividend king territory. That is stocks that have raised their annual payouts for at least 50 years, and that's pretty impressive when you look back at the last 50 years or more. Over the last 64 years alone, we have seen several recessions, economic crisis, stock market crashes, wars, soaring inflation, financial crisis, a terrorist attack, and the 2020 health crisis. Yet through it all, 3M continued to give shareholders an annual pay raise.
John, thank you so much for your insights. The 3M Company has come under fire from investors of late, mostly because of some lawsuits it's dealing with and uncertainty around how it will impact the company. In addition to this, business has slowed down a little. However, there is a chance that the selling with 3M stock could be overkill. and investors have become too pessimistic. Even conservative Wall Street seems to think so. 3M company is fundamentally strong, its financial performance seems decent going forward, plus the company has built brand royalty over years that could generate sustained business. Good news for income investors, though, is that weakness in MMM stock has made the dividend yield attractive. Don't forget, 3M company has a very long track record of paying and increasing dividends. Long-term investors could continue to generate decent capital appreciation and income with 3M stock. The stock is down, but remains compelling for contrarian investors. That's it for today, and make sure to go to incomeinvestors.com now to get our free special reports on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We will be back with more videos soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.